Hey everyone, it's Ken Rakowski. Welcome to the William Quigley Insider. Today is a different day because we don't have a William Quigley. Yeah, but maybe it's better this way. Maybe because we have Terren, and today, Terren, we get to dive deep into the idea of going public, why it really works for you, what are the upsides, downsides, and what should we look at when we look at other companies. And of course, you could just promote every single thing you're doing right now. This is like a dream come true. So Terren Peizer, hey Terren, tell us about your very first company that you took public. What was it?
Oh gosh. There was a company, well, I mean, me as the owner or,
Yeah.
my first company, I think was called Urethane Technologies.
You don't know what company right off the top of your head? It doesn't.
Well, I mean, it was a pink sheet company that I took onto NASDAQ.
Mm-hmm.
And I invested in the company and I owned 50% and I was chairman. And the promise was polyurethane tires that wouldn't go flat. And we were working on a deal with China when they only had bicycles on the roads. That's how long ago it was. So that was the first one. And I did really well on that. And
in your mind, what is really well?
Well, back then it was a trade. I put 5 million into it and I probably made 10 in the first year.
Okay, so you doubled your money.
No, 15, 5 became worth 15.
Got it. And you sold the company. What'd you do with it?
I just sold my stake in the company.
So that was your first. And from there you said, man, I just like going public. I like being a publicly traded company.
Well, actually, no. Well, to back up, most of the companies when I was at Goldman Sachs, I worked with Bob Rubin, and we were in the risk arbitrage business. So we only dealt with public companies. So it was easy to understand. You read the filings, you could understand everything about the company. Then when I went to Drexel, most of the companies were public, but not all. There was a lot of our biggest financings were private companies, actually. And there, I became much more familiar with the trade-off between private and public. And then, of course, we created the private equity industry, essentially, back then.
You just created it.
What?
It didn't exist.
It didn't really exist. There were two, well, that's not true. There were two private equity funds. They were very small, like less than 50 million. One was called KKR.
KKR, of course.
Yeah. And the other one was called Forsman Leff, which was Teddy Forsman. I'm sorry, Forsman Little. Forsman Leff with his brother. So I got an appreciation for public, private, and then what really crystallized in my mind was when I invested. So I started investing in small companies, and I had a particular, I think there's a quote in the Wall Street Journal or New York Times about what types of companies I invested in. And it was there that I realized as an investor that it's much better in the public markets because you have liquidity. And it's much better because you have, and back then it wasn't real-time information. So I had a huge edge investing in public companies. Everyone else didn't have all the same information. So, and it was not inside information, it's just I had better information.
Got it.
So, and then that evolved to me being an issuer. And the first company that I was an issuer was actually the precursor to my Alzheimer's drug today, which will be part of BioV in the future. And that was a company called Hollis Pharmaceuticals. And there again, I created a tremendous amount of value and I sold my stake in the company for a tremendous profit. But there I wasn't, the founder was a guy named Richard Hollis, and I was like his co-pilot.
Don't need all this detail. It's a very simple question. Let me just go ask this question. Was there ever a point in time where you said, hey, I know I can make a ton of money going public. is there any point in time where you go, I really need to make sure the shareholders are super satisfied because whatever I do next, they will generally maybe follow me?
But here's the thing. I've never done an IPO for one of my companies. I've always done reverse mergers. And the biggest reverse merger that I was involved with is one of the biggest companies in America, and that's called Danaher. And I did a reverse merger with Steve and Mitch Rales in 1983. And Danaher today is a $140 billion company.
Okay. So again, do you
well,
still
reverse merger is different, completely different animal than an IPO. It's kind of, the reverse merger is what's going on in the SPAC world right now.
Mhm.
And in fact, I think I'll be doing a SPAC, $500 million SPAC. Everyone should do a SPAC.
Yeah, I know. Quickly loves SPACs also. You two agree on that. And we'll touch upon that, but I want to talk about shareholders because it still does require, regardless if you've taken something IPO or you do a reverse merger, you still need investors. You need people still to buy the stock or entities to acquire the stock, right?
See, if you do the VC, what you're really trying to get at, I think, is I'm the anti-VC. So the quicker I could be in a public company, the less beholden I am to a group of a few people, one person, the VCs. They're like, the Antichrist to me. They're evil. No, and plus my personality doesn't exactly go with theirs. They're very, particularly back in the day, they were very buttoned down. I mean, literally ties, button down shirts, really preppy and all that. So they've come a long way. But so I didn't do IPOs. And the reason is I would do a reverse merger at an early stage. And that just meant I could attract capital on my terms, not the VC terms, because I can market the securities, the stock of the reverse merger of the shell company. When I put in the company, I can market it to, and I was a pretty good salesman. I could sell to everyone and not be beholden to a group.
Okay, that's not where I was going. I was going is, as long as you give fair value to the shareholders, they're going to follow you into other investments. Do you agree with that?
Well, it's funny you should say that because just today, which was a pretty big day in On Track, the old, here, you can see up
Cats.
there, the old Catasis, and everyone still likes saying cats. But it's funny you should say that because everyone today was saying, when are you doing your BioV deal? So I do have a following, and that following goes back to Cray, the supercomputing company.
Yeah, most people don't know this. You bought Cray from Silicon Graphics?
Yeah, Silicon Graphics. I bought it actually, it's very funny. They were so embarrassed. They basically paid me to take it off their hands. And they wanted to save the write down. So they grossed up receivables and payables, and they inflated the price to $80 million when I really only paid 15 and I didn't even put up that money. And it just sold for $1.5 billion to Hewlett Packard.
Wow. Yeah, but you got out of it way before then.
I got it out of $1.5 billion market value in 2 years.
Oh, you did? You did?
Yeah.
Okay.
Yeah.
So again.
Yeah, and that was an interesting thing. Back then, the Japanese were dumping supercomputers around the late 1999, 2000, 2001. And all I did is I cut a deal with the US government to have anti-dumping legislation. And then the stock went, I bought the company so the market value of the company when I bought it was, it was the value of the cash, $20 million. Mm-hmm. And within 2 years, it went to $1.7 billion after the US enacted the anti-dumping legislation. And then I stepped down as chairman, I sold my stock. Boom.
Got it. Was that one of your bigger deals?
At the time.
Yeah. When did you have your first FU money?
When I was 23.
And
it depends what you describe. It depends what you describe it. I still won't say fuck you.
So you still don't have that FU money?
No, I mean, to each his own.
What kind of
cars?
I'm not
motivated by money.
What kind of cars do you have in your garage?
I got a Volkswagen Rabbit.
Shut up. What do you got in the garage?
Chevy.
No. What do you got?
I got a Duster.
Oh,
Plymouth Duster.
What do you got?
I have, okay, what you're getting at is I have expensive cars that I could sell my cars for over $1 million.
You can. And
Yeah.
the reason I'm saying is that's pretty much FU money, isn't it?
I don't think today.
Okay, fine. I'm just saying it's pure ostentatious.
Okay, but I live in a 1,200 square foot condo that I lived in since I was 25.
I get it because you don't have a woman in your life that really demands you to get a bigger home. That's why.
Oh, I've had them demand them along the way.
You know what I mean, but that's
and I've
okay.
leased them.
And this is why, again, you need some therapy when it comes to women, but that's a different show. Let's talk about what's
I think
going on.
some guys here would say I need no help with women.
Well, as long as you want to have them for a couple of weeks. I mean, you treat women like Yelp reviews. You know, if they have a bad review, you dump it. You don't go back to it anymore.
LA Eater, maybe.
Okay. Terren, I'm happy they're hanging out with us because Quigley is all about crypto and, you know, he's done extremely well on the crypto side. You go, I just don't get it. You don't do it. It's kind of like you look at it as if you don't get it, you don't even want to get involved. You only get involved with businesses and ideas that you can totally run with and describe.
I would say that is 100% true, except for one exception. I am chairman of a crypto company.
They probably brought you in because either they wanted money or they want you for namesake.
Probably the money, because I don't know what my namesake was worth.
Which
they didn't give me any equity.
Which crypto?
Casper Labs?
Oh, Megan.
No.
Right?
No, she's not involved.
Oh, okay.
No, but Brock is. Brock's one of my partners in it. He brought me in, actually.
Actually, I'm waiting. Brock says he might even pop on this call. So I figured, hey, let's just have some fun since Quigley's gone. You know, since Dad's gone, let's have fun, right? Let's bring Brock in here, right?
Because you can't have him in the same Zoom. Wait, because you can't have him in the same Zoom.
True, isn't it? It's sad, right? And that's a different story. So hey, let's talk about caddises, and let's go with some of you guys right now. Guys, who here has caddis? Excuse me, what's it called now?
On track. It's our name of our product.
Raise your hand if you have it. Okay, let's go over to Mr. Freeman. David, I'm going to talk to David first. David, kind of shocked on what happened with the stock the last couple of days?
I can't say that I have been watching it that carefully. I've been just hanging on for the ride.
Okay, let's just do this. What did you buy it at?
I bought it, I think, low 20s, 17-ish to low 20s.
Can you look at the stock right now?
The symbol is OTRK. In case you missed it, we changed it.
OTRK.
You know what? I do get the announcements, but I didn't read the rest of it. Oh,
56.40.
Wait, I want him to look at it. Who just did that? Calm down, Adam. Go ahead. You didn't hear what he said, did you?
No, because you know, this is what happens when you get older. You can't hear as well. Woo! Nice. Thank you.
That's what I wanted, Adam. Jeez, Adam wants to, before you even.
I didn't ruin it. He didn't hear me.
Yeah, this is good. This is good.
Right?
Yeah.
That's good. Now, I think it's a $100 stock. That's me personally saying that. And that's why I wanted to talk about. Adam, you were pretty surprised too, right?
Yeah, I've been following it almost every day. I actually bought my first at around 10 way back when, and then I bought another chunk at 18.
By the way, remember, he told us to buy it when it was at 3, everyone.
I know.
3, and I was trying to get. Now, the reason why I liked it, Terren, is I got to understand it. Once you described it, it made all the sense in the world. So I felt like I can talk about it because it's got real, simple explanations to it. It's like Warren Buffett. Warren Buffett says if you can explain it, he can buy it and he'll sell it. Caddises or on track makes sense. Do you agree with that?
Do I agree with it?
Well, of course you do. That's one reason why you liked it also, right?
No, you have to understand something. I created it. I didn't buy it off the shelf. In fact, what I did was either counterintuitive, illogical, or just plain dumb stupid of me. Is I created a product, build a company around a product for which the end user doesn't want. When you have multiple mental behavioral health issues and multiple chronic diseases, you are treatment and care avoidant. They don't want care. And that's what's interesting. There was a merger with Teladoc and Livongo yesterday. It made a lot of news. The two biggest virtual care telemedicine companies. But it's interesting. So Livongo sold for $18 billion. That was the price at the time of the deal. We are 1 year behind in revenues of Livongo. We have a bigger EBITDA margin. They went positive EBITDA for the first quarter at a $300 million run rate. We're going positive in the fourth quarter at a $120 million run rate, EBITDA positive. We have greater revenue growth, greater EBITDA margin. We have no competition. This is what I'm getting at. The public is so stupid. They have tons of competition.
What's the stock symbol?
LVGO, Livongo. It was the darling, went public last summer at $2.5 billion. It got lumped in with the virtual care CV19. Oh, wait, let me get my phone. Hold on.
It's an expensive stock. It's 134.
Yeah.
So there we go. You guys are looking at this. You can see right now the market cap's 13 billion. And let's just see if there's any insider trading issues on here because we have Terren with us, right? Oh, I'm sorry, Terren. I thought you were gone.
Their market cap's 18 billion.
This is 13 billion.
It's wrong. What do you? Oh, Yahoo. They don't know what the fully diluted outstanding is. They paid. Okay, by the way, it's at the time of the deal, but the stock has come off because Teladoc stock has come off.
So wait, is this not your company or is?
No, it is not.
Okay.
My company, On Track is what is being, the reason On Track is up a lot today is because people are now saying that this is the next Livongo. And it's what my point is it's when you say it's $100 stock, I said, oh my God, are we losing all of our customers? Because it's really a $500 stock.
All right, wait. So again, what is On Track stock symbol?
OTRK.
And again, why'd you change it?
Well, there's a lot of reasons. One, I always separated the product name from the corporate name in case one failed. It's good to hedge your bets that way. Now, when we signed Aetna to national rollout, that was our first national rollout of a health plan emerging from the pilot phase. We announced Cigna back in June, rolling out across the country in their Medicare population. That was our second. So one is a data point, two is the beginning of a trend. And at that point, I felt it was time to leverage the brand because On Track, the program, has great value in the healthcare space. What the fuck's Catasys anyway? So On Track's the name of our program. So it's a great name, On Track. And we're on track to go to $500 a share.
So why back in March, let's go with February 5th, you just had a constant tick upward. And then why in the last 3 days, last 2 days, why was there just a total blast upward? What happened first from February to the first week of August to now?
Well, in February, it was a combination of things. One, I bought a chunk of stock down there.
Okay, this is you, right?
Oh wait, no. Oh yeah, no, I'm down a little lower. No, the low.
Down here.
Yeah.
So how would this?
No, right before, and then I reported it, and then it jumped.
Oh, got it. So it took. Are you saying it takes about a month for it to get recorded?
No. I bought it right before this inflection. Yeah, around $10.
So $10. This is 15. So around $10 is where you bought it at, and then you're saying right here is where it starts going up? No, it took a month for it to get registered. That seems like a long time.
No. Well, first of all, I bought it in one of my entities that no one even recognized.
Okay, got it. So when you tell us, like, that one company out of China that you told us to buy at 52 cents, which I bought, LKCO.
Yeah.
You said you're going to put 10 million in, and then it bounces up. That's
And I sold my stock. Right. It traded to $1.30.
yeah, I know.
I know. I sold my stock, and now there's something fishy. You got to be careful about these Chinese companies. There's something fishy. They closed Geely, which is the largest automotive company, one of the largest companies in China, period, is their partner. And they were supposed to close an investment. They announced a $13.5 million tranche, 3 tranches, closing every month beginning July 31st, last Friday. They have not disclosed, they said they received the cash. They didn't say it publicly. They told me that they received the cash, but they have yet to file an 8K on it. And it is significant. They should be that they closed it, and the stock won't go up, and they haven't disclosed it. So there's something amiss. I'll find out tomorrow morning. But if everything's kosher, I will give the company 10 million more and do that all over again.
You'll give 10 million, and that will see a spike up again. Because I got out of it at $1.22, which I mean, that's amazing for what it did. Let's look at.
Would you own it for 2-3 weeks?
I owned it for 3 weeks. Yeah, I owned it from when you told us to buy it.
Okay.
Why are you laughing? Should I not listen to you?
No, at your peril. At your peril.
Oh God, come on.
I would say this. I would say that stay tuned on that. I'll have an update tomorrow morning.
Okay.
And understand, I ended up, what my deal with the company, I don't want to get, it's a structure I created. No one could understand it, which is good because no one copies it, but it's a very complex equity and warrant structure. So I put up 10 million and I got back 30 in 2 months.
That's incredible. Why do you still live in California with all those capital gains and the taxes out here?
Well, that's just my, that's funny you said that, because that's just my trading stuff, my opportunistic stuff that I have an operation in New York that does this all day. I just approve the deals or I structure them. I don't have time. Right. So I don't really care. I don't mind paying taxes on that. But it's my real big holdings that I'm going to, I might have to move to Puerto Rico one day.
Well, really? So you would do Puerto Rico over anywhere else then?
Well, no, right now I'm trying to think of what state, but I was told like the state of California is merciless if you move to another state. They will track how much, how much toothpaste you bought in each city. They'll do anything. I mean, they'll hunt me down. So that's when I started thinking, okay, maybe I can live in a nice place at the Ritz-Carlton in Puerto Rico for, whatever 5 months in a day, 6 months in a day, whatever it is. Maybe I could do it. But that's when I'm ready to sell some of my companies, but I'm not.
Yeah, it's when you turn 60. Oh, that's right. That was 2 years ago. So, hey, Terren, let's dive into a few things.
61 now.
I know. Let's dive into a few things.
Yep.
Are you able to look at a company that you don't own and look at it as an opportunity? Do you invest in companies on the open stock market? Do you play the market?
No. You
don't play the market?
No.
Okay, so you only use or invest in your own companies. Is that correct?
No, I don't. I won't say never. 90-something% of the time, I don't. There are some companies I know extremely well, but I don't have the mind space during the day to watch a screen. Like I don't watch a screen.
Yes, you do. I called you this morning. You had a screen open with all tickers on it.
Well, that's the beginning of the morning. No, it's like breakfast. I look at breakfast, lunch, which is closing, and then I don't look.
But if you're not investing in those companies, why does it matter what the market?
I know. I know a lot about a lot of public companies, and I have really good markets. I do make market calls, and I am unbelievable at bottoms, and pretty good at tops. But I have more fun at bottoms than I do at tops.
Yeah. So tell us.
And purely based on me being around the markets since the Dow Jones was at 300.
Yeah. But you're being intuitive too. You've been around. So right now, where are we? Are we near a bottom or a top? Or where are we right now? It seems like we're at a top again, right?
We are closer to the top than the bottom. Yeah.
I get it, but we felt.
No, we are at the top. We are at bubblicious. I mean, we're bubblicious.
So that correction, is it coming?
Well, I think what the market's setting itself up to do is a series of inner market corrections. So, I mean, we're seeing them. And I think those will continue. But some of the things we're seeing based on CV19 and social distancing, the Etsy's of the world, all these companies, they're just trading at just tremendous, like Livongo. So Livongo is trading, it was bought yesterday at a 59 times this year's revenue, 35 times next year's revenue, and the market has no clue what their customer base is like, what their competition's like, what their technology's like. Now I'm in this space, so I know private companies and public companies because OnTrack's going to be very active in the M&A business.
Okay, but keep on going with Livongo.
No, so Livongo, 35 times revenue next year with a crappy business model.
It makes no sense, right? It's all hype.
The air will come out of the balloon.
It still blows my mind away if we go back a few years. Not a publicly traded company, private company, and that's WhatsApp. WhatsApp with 53 employees gets acquired for $19 billion. When you see things like that, you just go, what? But Facebook figured out there's something there. So that's a private company. Do you ever think maybe?
But that's a synergistic acquisition. It's easier for Facebook to see something than the public.
Right.
Like I'm buying a company. Well, this is insignificant, so it's not material, non-public information. And I talked about it on yesterday's conference call. Mm-hmm. But I'm buying a technology that's in a private company that I'm buying it for 75,000 shares of OnTrack and $3 million. So total, and I guaranteed a $7 million number. Mm-hmm. Now, the business is it does $1 million, $1 million, $2 million. Adobe's its main customer. But it's got a great technology platform that we could take it. So I'm going to buy it for $7 million. It will add $1 billion at least of value to OnTrack.
So it would double in value because OnTrack's about $1 billion right now in market cap.
OnTrack is $1.3 billion enterprise value right now.
Okay. So you're saying it's that substantial. Just that acquisition would totally transform OnTrack.
Yeah, just because actually the interesting thing, it enables us to do what Livongo does. We don't want to do exactly what Livongo does, but it enables us to transform into this platform model. So we're making money while we sleep. That's really, and it enables us to gather a lot of data from a lot of different sources. And as you know, data is the new gold. So
it is the new gold. And that's, I want to talk about short sellers. I don't think you're at a point to where you have a ton of short sellers like Tesla does where.
Oh, no. OnTrack was the second. What do you think the stock's going crazy? OnTrack was the second most shorted stock, first of all, going into earnings and on NASDAQ, next to Match.com, believe it or not.
Why is that? And tell us what you think about short selling.
Well, it's really funny, actually. I mean, I'm a great short seller. I just I don't practice it anymore, but, you know, I don't, first of all, in irrational markets, it's irrational to short anything because you don't, you know, a company could be selling widgets and then they announce a CV19 drug and the stock could go up 30 points like nothing.
Kodak.
Yeah, Kodak's a good example, right? So the reason, well, short sellers are great. It provides liquidity, but I have activist shorts. They created fictitious research report and from an anonymous website, quoting anonymous sources and even doctoring documents. And that's what caused the disruption in our stock when we were up 30 the first time and went all the way down to 18. It was a bear raid. and they had 5 million shorts 5 million shares short, both reported and naked, going into the name change. And so I gave you the public reason for the name change. The private reason was I changed the QSIP. When you change the QSIP, the old cats cease to trade again.
Yeah, I saw that.
So if you're short, and well, put it this way: if you're long, you want to turn your CATASYS certificate into the new QSIP on track certificate, because the two, only one is going to trade in the market, the on track. So if you're short, the people that you sold short to, that own the stock, want their shares back so they could turn it in and get on track shares so they could trade it. That is a problem.
But your broker should do that.
But yeah, but it's not a book entry. So anyway, short selling, naked short selling is illegal. And and Wall Street firms are complicit in it, and they look the other way. There's going to be major criminal investigation, billions of dollars in lawsuits coming for naked short selling. But here's what the Wall Street firms do.
Do us a favor real quick, so people may not know what that it means. What does naked short selling mean?
Okay, so a legal short is when you borrow shares from a long, and the broker, Merrill Lynch is your broker. You say, I want to sell short 100,000 shares of on track. They say, okay, let me go get a locate, meaning let me find 100,000 shares that could be lent to you. Then they borrow them from someone who's long them. They pay the person an interest rate. Like say they'll pay them 5%, but they'll offer it to the short seller at 10 to 20% interest rate. So what they're paying the long is a rebate of what they're getting from the borrower. Now, a naked short, that's a legal short. But the rates that they're charging are astronomical. A naked short is, I'm a hedge fund. I'm the biggest hedge fund on the street. And you know what? My prime broker that I borrow billions and billions, tens of billions of dollars from and pay interest to, I'm going to say, sell 100,000 shares of on track. I'm not even going to say if it's long or short, because you no longer need a plus tick to sell short. They got rid of the plus tick rule. So the broker doesn't, the intermediary doesn't even bother, because it's a big hedge fund, doesn't even bother to check if it's short, or if it's short, does he have a locate on long shares? So the reason someone sells short naked is because there's no more borrow available. The Wall Street firm is charging this person interest on 100,000 shares of on track. Now the interest rate's up to 50%. If you short on track, you have to pay annualized 50% interest. So you're betting that the stock's going to go down by more than 50% over the year. Now it's interesting, think about this business. So Wall Street makes a fortune on borrowing shares and lending shares. Think about this concept. When someone sells naked short, they're not borrowing anything. They're lending nothing to someone, and they're charging them interest on nothing. So
it'd be illegal.
Right. So it's 20. That's why our stock has been lagging what the real multiple will be. Now, everyone has come up with reasons why that is, but that's just rationalizations. The real reason is we weren't institutional enough of a stock yet to overcome 5 million shares in an illiquid stock.
How does selling short affect the actual company?
It doesn't, except when they're active as shorts. And what they'll do, they print up a bullshit 40-page report on the company. I'll give you another example. This is really funny. So they went into my Wikipedia. So I'm identified with On Track. And they go into my Wikipedia page. They've been working slowly. I haven't been there in 10 years. They go to the Wikipedia page, and slowly over the last 2 months, they've been changing everything. And they've been creating this whole negative thing about me being a crook, me being this, me being that. And what they do is they'll call up our customers, Aetna, Cigna, you know, all these blue chip health plans that are very conservative. And they'll call, do you know who you're doing business with? Have you bothered?
Jeez.
But this is really funny. This is what's going on real time. You should have seen it. Like it was last week, it read like I was wanted in all 50 states. So Wikipedia, it's called biographical vandalism. Wikipedia doesn't like that because it happens to a lot of celebrities. And Wikipedia editors have ganged up on the short seller who's obsessed with me. He did this 10 years ago to me. And he actually offered me, he blackmailed me. 10 years ago, he said, I will do this again to you unless you give me $100,000. And I said, I'll see you on the I'll see you on the playing field. So I saw him on the playing field. I think they carried him out in a stretcher today.
Okay, let's go after some of the questions that are out here. I'm gonna first go to, God, you guys, I love reading all this. TC, I'm just gonna do you real quick. What are you saying? Did you go to crypto on us, TC?
I'm staying in the same vein. I was just using another example of how organizations or entities can spread fear, uncertainty out to try to short an asset. They did it with Chainlink, which is a
Yeah, it's a crypto.
massive
But
crypto.
Can we keep to real assets, please?
You know what? Does it
No
matter? Wait,
comment.
Terren. Matter if they're making money on it, it is an asset then, because they're making money as the asset from it.
Because you're trading it? Look,
Yeah,
this is a philosophical conversation I've had with Brock and William going back a long time. But I will say this. It's a speculative tool. It's a group of people, by and large, that have common interests, that have a common, uniform view of the world. And it's not a real market. Now, that doesn't mean you can't make a lot of money, of course. But I wouldn't put all my money in it.
I get it, but establishing a value for gold is the same thing, because we're establishing a uniform value for gold.
Well, gold has industrial value. Gold has been around for many millennium. Gold, there are many cultures that hold gold very sacrosanct, like India, Asia, etc. Believe me, I'm the first one to tell you, Bitcoin is digital gold and it makes sense. But what I don't think people factor in is depression. What happens during a depression? What's going to happen to the value of money, whether it be crypto or any currency? So if you can't have it every way. First you say it's a digital currency. It's not. Then you say,
wait, stop talking about this. You don't know this stuff. Shut up.
Oh, yes, I do.
Shut up. No, this is not your space.
Oh, I know it pretty damn well. I started with it. Who told William to sell Bitcoin and put all of his Bitcoin money to Ethereum when Ethereum was $2?
I did, and it was 87 cents, by the way.
No, that's when Brock was selling it to everyone. I was there.
It was 87 cents.
I was with Brock in Costa Rica when that was happening.
87 cents.
I said, Brock, okay, buy me $1 million worth. Are you kidding me? That'll take it up to $5. I said, okay, I can't really do this. But I told William, when William and I were, he'll tell you, he'll credit me with his Ethereum play.
Right. Hey, let's go to Z. Z, you got a question.
Yeah, how you doing? Actually, I'm interested in Nick's question too, but let's say I'm holding 100 shares of OnTrack. Could I then lend them to shorts and make a fee for doing that?
Yeah. Believe me, there are a lot of people looking for borrows. But there's not a borrow. Well, there's probably a lot of short covering. Today could have been a massive bloodbath where they got margin calls or they just said uncle. And they just got cashed out. Today was the first, yesterday it started. Today was the first day. It'll be interesting to see what the next short interest is.
All right, let's talk about a couple. By the way, Nick, you wanted to say something?
Yeah, just quickly, Terren, I bought it at 14, so thank you.
Yeah, there you go.
And every time, by the way, it goes up and it goes down. If I'm having a great day, I think Terren is having a much better day than I am. And if it's going down, And if it's going down, I'm thinking you're having a much worse day than me. So
It's so funny. Let me just be very clear. I do not, in my mind, the stock's already 500. So every day is a bad day that it's not at 500. I do not think of it. I do not care about the gyrations of the stock.
right, okay.
Okay. Like
So-
that attitude. Thank
My-
you for that. Thanks, Nick.
My simple question though.
Yep.
So I bought at 14. Thank you. Should I be buying at 56?
Look, I will say this till I'm blue in the face. On Track is a great, for the time being, unless something changes in the world, you never know, regulation, whatever. On Track is a great long-term investment. BioV is the best deal I have ever done and will be the best performing stock of my life.
Okay, let's touch upon that. Why? Nick, is that good? Can we ask him that
Yeah,
question?
I bought BioV too. Just at, yeah, I bought that.
I'm
too.
gonna
Yeah, but
put
you
away-
bought it. You
I'll
bought
be
it
right
when? Where are you going? Was that in your colostomy bag? What was that?
Put it back in the freezer.
I mean, I know you're old.
It was his colostomy bag.
Yeah, it was. I mean, I just let you know.
I went on a hike today, right before here.
I
Just
bought
'cause I'm
BioV at
Hungover and I needed to clear the heads.
I bought BioV at $8.16.
Okay, where do we buy Biovine?
Okay, so I brought it to you at $3.
What's the stock symbol?
VI.
VI.
BIVI?
Yeah, Boy Isaac, Victor Isaac.
Okay, so here we go, guys. Let's take a look at it. Let's go look at it. This is Yahoo. I know how much you hate the Yahoo. But what are we looking at here? We're looking at $17. We're looking, today's at 15.
Correct. Now, here's why, and it's very, you can't really buy, it's very illiquid, but it won't be soon because I'm going to be uplisting it on NASDAQ. And I own 90% of the company. There's 12 million shares fully diluted. I own 11 million of them. But here's what I like about it. And Ken starts tuning out anytime I talk about biotech because he doesn't understand it.
I don't turn out. You just take too long.
But if you listen and follow the pieces, you'll invest most of your adult money into it.
Okay.
If you don't listen and you just want, oh, buy this stock because it's going higher, you only buy 10,000 shares.
I mean, but it's like verbal masturbation with you. But okay, let's do it. Go for it.
You know, it's funny. Fidelity has no problem listening. I mean,
Go for it.
I'll try to keep it very simple.
Okay.
There is an orphan drug, which means it's for a patient population of less than 200,000 people. There's a rare liver disease called refractory ascites. I won't get into it. I won't get into the science. Just know that we are entering a pivotal study, which means phase 3, which pivotal means the FDA will probably, they don't promise it, but they will probably approve it upon a successful study. Upon a successful study, the alternative to this disease is a sure death. We come along, our drug represents a long-term bridge to a liver transplant. The alternative is a short-term sentence to death if you don't get a liver transplant, okay? So in that case, we'll get 2/3 of this market. The market size is 650 million.
By the way, good job on explaining it now. Okay. That was awesome.
Well, I've learned that you tune out and then you won't let me talk about anything
Death
again.
or life. Pick it. I mean, it's kind of easy, right?
I got to know my audience. So then, so 650 is the total addressable market. We'll get 2/3 because the alternative is death. So that gets you down to, we'll just use the round numbers, 450 million. The beauty of this, first of all, it'll take a year to ramp up to 450 million of revenue. The cost of goods sold is less than 1%. So it's a 99% gross margin. it's to distribute the drug, since it's a very special disease, liver disease, and there are 3,000 liver specialists in the country, it only takes 30 salespeople. Those 30 salespeople will cost $6 million. So between the cost of goods sold and the cost of the sales force is like $12 million, say. So that gets us down to 438 million of almost EBITDA. Let's throw in another 10 for SG&A and another 10 for R&D, even though it's way too much. So let's say it gets us down to 400 million. 400 million of EBITDA, scaling, it'll only take 1 year from launch. The FDA will approve this in 2022. It'll take 1 year to ramp up to that 400 million EBITDA run rate. It'll trade at a 15 multiple of that easily, maybe 20, but 15 is 6 billion. There is very little chance to no chance that we fail the phase 3. It reverses the disease. It works. Every study has always shown efficacy. And the FDA gave us softballs to have a successful study, softballs meaning endpoints of the study, clinical outcomes. And so from now, over the next 3 years, it'll be discounting a $6 billion value, but that's just the beginning. We're gonna uplist on NASDAQ in the next 30 days. That's when the stock's gonna really start trading. In the next 30 days, shortly thereafter, lo and behold, I have 2 other drugs, both that I own 100% of. One is my CV19 drug with the Mayo Clinic. We're waiting on the FDA. Actually, the Trump administration is now getting involved. It looks like there are 2 FDA approved drugs used in 1 tablet. They're synergistic, and it's the key to the keyhole. So the cell has keyholes on it. It has 2. The virus goes through the keyhole, so it goes down to the nucleus, corrupts the machinery to make tons of virus and overwhelm the immune system. What our drugs does, the combination, puts 2 keys, one in one keyhole, one in another keyhole. If there's a key in the keyhole, the virus can't put its key, the spike, in the keyhole. It can't get in, it can't replicate, the virus dies. Since there are 2 FDA approved drugs there, it's being used, and it eradicates the virus in 36 to 72 hours. This is what the country needs. And there's a lot of people trying to stop me and get this drug to the market. But then it'll happen, but we're going through a lot of, there are lawsuits being threatened. It's the Trump administration now is getting involved this week. We'll see what happens. But that I'm going to fold that in. We announced the study, the pivotal study.
That will go inside BioVine.
Yeah.
Okay, got it.
Possibly, because there's been no contact between the boards. It's all in my head. I own 90% of one. I own 100% of the other. I might do this. I might do it. I might not do this. But there's been no emails. There's been no public. I haven't approached the idea to the board. There is you should look at my board members on the BioV board. Very impressive board that was just put together because they know the science. Some of the biggest names in biotech.
Yeah, actually, you want to announce the woman you just brought on?
The woman I just brought on.
Wait, was I talking to you? I thought I was talking to you. Didn't you just bring in an impressive board member?
Oh, that's on track. That's not public information.
Okay, got it. That's not public information?
No.
Oh, okay.
It's not material. It's not material. Don't worry.
Okay, don't worry about it. I'm not going to bring it up.
Yeah, Tuesday morning, we're going to announce a very influential woman in healthcare. Okay, now, the bigger thing that I want to talk about is my Alzheimer's drug. We have now everyone knows Alzheimer's is the biggest unmet medical need besides CV19 right now.
You call it diabetes 2 or 3.
It's called type 3 diabetes.
Yeah, that's what you're calling it, right?
Right. No, that's what the scientists are calling it.
Oh, that's what they're calling. Okay, got it.
Yeah. Now, what I have at the highest level, I believe this will be one of the most valuable. This will be Amazon, Tesla-like. This is, and it's the only, we're waiting on the FDA for the final approval for the pivotal study. There is not one other drug in the world that is in a pivotal Alzheimer's study. There is a company called Denali. It's a group of PhDs out of Stanford. It went public a year ago or so. It has a $3 billion market cap for phase 1 in Parkinson's. Phase 1, Parkinson's, $3 billion. We are going into a pivotal study in Alzheimer's. If the study is successful, and every thought leader around the world believes that this is the answer, and I've been working on this one for 25 years. If this study is successful, the market cap will go beyond Tesla. and I have no reason to believe, and I could go through the scientific explanation why this will be successful.
And this is all going to be inside the same stock, same company.
If my right side of the brain gets together with my left side of the brain and they reach a deal.
Okay, let's do this. Let's just open up the phones. Let's go after a few questions that are out there because I'm watching all you guys pop in there. Hey, Jeff, I want to go to you first. So unmute and let's see your camera. Come on. All right, Jeff, what's your question for Terren? Come on, put your video on.
By the way, you do know that William is usually my warm-up band.
No, it's the other way around. All right, Jeff, go for it. Jeff. Why can't we hear from Jeff? All right, so in the process, while we're waiting on Jeff, let's go over to Austin. All right, Austin, go for it.
I'm unmuted.
Yep.
What's up, Terren? How are you?
Good. How you doing?
Good, man. Good. So what was my question? Let me see. Oh, I had a bunch of them, but so how long will these other drugs take to roll up into Bivi? Like, what is the now to this?
Well, here's the thing. And we don't know that this is going to happen. It may happen.
Sure.
So here's the thing. NASDAQ requires you to uplist. It requires you to have 1 year's working capital. If I told them that I was doing, by the way, the bottom line about BioV to keep in mind that we are going to have, if we do all this, 3 different drugs in 3 pivotal studies. I don't know a major pharmaceutical company that has that. So that puts it in perspective. But so if I told NASDAQ that I have these 3 different drugs that I want to do pivotal studies in, they would require me to raise $75, $100 million today to get up on NASDAQ. Now, point in fact is this is the lowest BioV's ever going to be. Wherever it's trading at now, or wherever we do our financing at, once on NASDAQ, it's going to be just going to be up sloping to the right. It'll go up and down a little bit. It'll be volatile, but so I don't want to raise a lot of capital at these levels. So right now, you know, it could be 100, 130 million pre-money valuation. I'm going to raise the minimum I need to get on NASDAQ, which is about 10 to $15 million. And then I'm going to, then I'll merge in the CV19 drug, and then I'll merge in the Alzheimer's drug. But the Alzheimer's drug is even bigger than just Alzheimer's. At the highest level, it's the most powerful anti-inflammatory. So every disease inflammation is implicated in, whether it's cardiovascular, whether it's cancer, whether it's diabetes, inflammation is implicated. The most powerful anti-inflammatory are steroids, but steroids are by definition anti-inflammatory, anti-inflammation, immunosuppressive. Inflammation is an immune response. Now, Ken, please, I haven't lost you yet, have I?
No, but I have a very important question to ask.
Okay, wait, I want to get to the punchline.
Okay, go ahead.
So our drug, which we're now using in neurodegenerate states because the scientific literature says neurodegeneration is the result of neuroinflammation, and the neuroinflammation causes insulin resistance in the brain And we were successful in an insulin resistance study. And we were the only successful company ever in reversing Parkinson's in an animal model. But at the high level, relative to all these diseases that we will go after, the most powerful anti-inflammatory. What else is wrong with steroids? It's toxic. It's a horrible side effect. Most powerful anti-inflammatory without immunosuppression, without any side effect profile, no toxicity at 40 times the dose in animals and humans.
This is the molecule that you own, right?
Correct.
Yes, I remember us on a hike and talking about it.
Correct.
Here, I have a very important question, and this is probably important to you too, Terren. Guys, take this poll real quick.
Which is my favorite tequila?
No, right here. So the question is, would you let your daughter date Terren?
No, they would let them marry Terren.
Let's see. Wait. We got a hell no or a welcome to the family. I'm just kind of curious. All right, you kind of curious, Terren? Are you ready?
I know what it's going to be, of course.
Wait, it's not. Come on, guys.
How about Mary? Why don't you change it to Mary?
Well, welcome to the family is good enough. Marriage isn't it anymore. Okay, here it is. And it's tight, Terren. The answer is welcome to the family, Terren.
By the way, I was asked, I'm godfather to one of Brock's children.
I know you are.
Right. I was just asked, to show you what a great guy I am, I was just asked to be godfather to my 11th child, and only 2 of the 11 are related to me. So I would recast that vote now.
What did you just say?
Meaning,
say that again?
I have 11 godchildren.
Oh, godchildren. Okay, I didn't hear the godchildren part. Okay, real quick. Hey, Jeff, are you back? Are you able to ask your question?
I am. Sorry about that.
Okay, go for it.
How are you? So, do you do a secondary offering when you're going to uplist into NASDAQ?
Yes.
Shares?
Yes.
Yes. Like how much are you going to?
I think $10 to $15 million worth.
Well, the price keeps going up. All right. And can you, I saw a lot of people comment on the past prices of OnTrack and Cadasys and Bivy. What happened back in 2008 or a while ago that the price was so high?
2015.
Well, the question, so why did the stock, the simple answer is because I was funding the company and I was diluting to hell the old shareholders.
Because I saw the price went up to like 24,000 something.
Yeah, but that's because, in 2000, this is interesting. In 2007, this company traded at a $600 million market cap on the promise of what we are today.
I'm on a conference call.
All right. So last thing, guys, I'm just going to mute everyone. I want to ask Terren, very simple. You started with something. I'd like you to end with it. Why should we all do SPACs? Why do you love them?
Well, it's free money. I mean, so listen to this deal. An investment bank came to me and said, Terren, we want to do a SPAC for you. And I said, well, maybe I'll do it myself. Maybe I'll do it on Track, being the sponsor. But I put in $4.9 million. I get 20% promote. In other words, I get 20% of the SPAC. And they want to do a $500 million SPAC. So my $4.9 million, if I find a good merger candidate, which is really someone who wants to go public. Now, I merge it with it, which for a $500 million SPAC, I'll probably do a $3 billion acquisition or a merger with a company that wants to go public. Now, what I'm interested in, so there are healthcare companies that I could create, I could do it. And day one, my 4.9 million is worth 125 million. And if it's a good acquisition, then, stock goes up, it could be worth, many multiples of that.
We're seeing SPACs popping up like crazy, right?
Right, because it's free money for the investment bank. Investors have no risk because if they get paid interest. If they don't like the merger, they can vote. If the stock goes up on the merger, then they'll stay in because they'll sell their shares in the market. If the stock goes below the the price that they paid, they'll vote against the merger. They get their money back. So there's no downside, only upside for the investor. So the banker wins, the investor wins, the promoter, me in this case, wins, the sponsor, not the promoter, the sponsor wins, and the company going. Now, you could debate, and there is a debate, what's more attractive, an IPO or a SPAC? What the SPAC does is it creates certainty and speed. And that's very important. The reason that I'm interested in the SPAC is different than everyone else's. What I'm interested in is A, can I do something in the SPAC that helps one of my public companies? Number one, like buy a company that I could use $4.9 million to control a $3 billion asset and get it to do a joint venture with On Track and benefit On Track with that. Or another thing I'm looking at it as is, oh, I expect there's going to be a financial calamity.
Yeah.
Then the IPO market shut and I have one of the bigger SPACs. Oh, I will have my pick of the companies that wanted to get it in the window, but couldn't. Whether that's the next Uber, who knows? Airbnb, we don't know.
William, I got to thank you so much for hanging out with us.
I'm
William,
Terren.
I'm sorry. I am so used to saying William. Sorry. Terren, first, happy belated birthday. And I really appreciate you coming on, just being a good sport. You really are. You've become a great friend over the last 10 years. I was very fearful of you initially. I'm just going to let you know. Okay? But
I remember, actually, I first met you at Joe's on a Saturday morning having horrible eggs, horrible bacon, horrible everything. And you don't remember this, but Tony Greenberg brought me. You had me, Tony Greenberg said that I was working on something really cool. And you know what that was? And you had me, what?
Halcyon.
Lithium.
Lithium. Yes, I remember Lithium.
You know what lithium is?
It was around addictions.
It's On Track.
Oh, it's On Track. Yeah, that makes sense. It's On Track. Yeah, I do remember. It was a very cool concept back then. That's why I love On Track.
I was a little ahead of my time.
You were. Thank you so much, Terren. I really appreciate it. Everyone, unmute yourself and let's thank Terren.
Thanks, everyone.
Hey, thank you, Terren.
Thank you, Terren.
Thank you. Thank you.
Wait.
Great job.
B-I-V-I.